This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everyone, a very good afternoon, and it is a Fed Wednesday. That's because in just a moment, we're going to get the latest Fed minutes from the fourth Fed decision of 2026. That was the first one that Kevin Warsh oversaw as Fed chair. That was on June 17th. So we are, of course, awaiting market reaction to that. I'm Carol Masser, along with Bailey Lipschultz. He is in for Tim, who is out this week. We'll see whether we get any more clarity on how the new Fed is under Kevin Warsh. For more, though, let's head to the Federal Reserve in Washington and to Tyler Kendall.
The minutes from Kevin Warsh's first meeting as Fed chair show that a few Federal Reserve officials said there was a case for raising rates, even as they decided to keep rates on hold in June, as we try to glean more insight into what caused this more hawkish shift on the committee. Keeping in mind that this was the meeting where we saw those projections basically show that there are these two equal camps that were emerging on the FOMC, as 9 members saw at least one rate hike this year and 9 members saw no moves or a rate cut. And that was really reiterated in these minutes, reflecting the view among officials that some see higher interest rates needed, while others say that there is still a case to stay on hold. The minutes tell us that the discussion really centered around inflation risks and restoring price stability. Writing in part, quote, participants judged that the risks to the inflation outlook were tilted to the upside. They observed that both core and total inflation had moved higher, generally attributed to the increases to the lingering effects of tariffs, supply chain disruptions, and the related to the closure of the Strait of Hormuz. But then there was also this discussion around the CapEx build out related to artificial intelligence. On that, the participants said, quote, many participants noted that ongoing strong demand for AI infrastructure would likely sustain upward pressure on prices for technology products and electricity, going on to add that some participants remarked that productivity gains associated with AI adoption would eventually reduce production costs and increase aggregate supply, which should put downward pressure on inflation, though they noted that effect would likely take time to materialize. On the labor market, participants generally saw labor remaining stable in the near term, adding that they assessed that the downside risks to achieving maximum employment had moderated a bit. Now, a huge question, of course, going into today was what would these minutes look like under a Fed chair, Kevin Warsh? And we have our answer, which is that they basically look more or less the same. All the same sections were there. We didn't really feel that they were shortened in any sense. We can say that it would take a majority of the voting members to approve the minutes. So maybe there wasn't a consensus there when it comes to what we know Kevin Warsh would like to see in terms of changes to the Fed's communication style, because Carol and Bailey, so you both know Warsh has vowed to move the central bank away from forward guidance. That was included in this statement, with a majority of participants remarking that they saw advantages in shortening the statements after FOMC decision.
All right, great stuff as always. Great breakdown of those latest Fed minutes from our Tyler Kendall. She's outside the Federal Reserve in Washington, D.C. She is our Bloomberg News Washington correspondent. Just a quick check on the trade. Not seeing too much reaction, certainly, on the equity side of things. Maybe a little bit lower. S&P was down, Bailey, about 36 now, actually a little bit less now. It's down about 25. NASDAQ has actually turned positive. It was down about 66 points.
Yeah, it seems like a little bit of a bid right now. Just keeping an eye, looking at the 10-year right now,
yes.
4.57%. And then also the dollar started to move higher, but now Bloomberg Dollar Index essentially unch on the day. So investors may be digesting that news, except for nothing quite new.
Yeah, it doesn't look like much movement in it overall. We're going to talk more about it in just a moment. We're going to check in with Stephanie Roth over at Wolfe Research. She talks about kind of the family infighting at the last Fed meeting, so I'm looking forward to talking with her. In the meantime, we do have to get to something that we've kind of been focusing on, certainly here at Bloomberg, and we've got to start with the on-again, off-again, on-again war with Iran, or trying to make sense of what it all means. We did have President Trump warn a fragile ceasefire ceasefire with Iran may be over, so raising the prospect of an end to peace negotiations and a potential renewal of full-on fighting between the two countries. That's going on. We had strikes against Iran, a fresh round of strikes from the U.S. and revoking a waiver that allowed the sale of Iranian oil. That happened late yesterday. We saw oil prices shoot up on it yesterday, again today. And this morning at the NATO meeting in Ankara, Turkey, with Ukrainian President Zelensky in a gathering with reporters, President Trump weighed in on Iran specifically.
Based on their actions over the last week or two, they're not doing a service to the people. And I think more than anything else is I got to know them. And I'm not sure I want to make a deal with them. We can play games, but I'm not sure I want to make a deal. Let's just finish the job.
All right, that, of course, was President Trump. For those listening on radio, Secretary of State Marco Rubio behind him. That, in fact, he made some comments earlier this morning, but that was within the last hour or so as he gets ready to wrap up his trip there in Turkey. Here to read the tea leaves, we want to check in on this. Bloomberg Economics senior geoeconomics analyst Adam Farrar. He's in the Bloomberg News Washington, D.C. bureau. Adam, good to have you here with Bailey and myself. What are we seeing between the United States? Does this kind of mean that there really never was a substantial peace deal between the two?
So there's no question we've seen a significant escalation in the past 24 hours. And I think, we shouldn't underemphasize the change and potential impact of the United States removing the waiver on Iranian oil, which was a key element of reaching that MOU that was signed several weeks ago between the U.S. and Iran, and theoretically put the Strait of Hormuz back on a more normal path. The strikes last night were certainly larger in scale, but they were still very much focused on the coast and going after Iranian fast boats that have been seen to be threatening ships in the Strait. And so, despite all of that, and despite the language you've heard from the president today, it seems that we've entered again kind of a familiar pattern of escalation and tit-for-tat fighting on both sides as they posture themselves in these negotiations, which certainly seems set to prolong further because of this current impasse.
Well, Adam, what can happen in the next 24 hours or even overnight? We saw how much has changed, again, from the U.S. and from Iran. And is it something where now the ball's back in Iran's court to do something to invoke further strikes from the U.S.?
So certainly Iran could choose to go after additional ships that are seen transiting through the secondary route closer to Oman that Iran does not support, that Iran feels is being used to try and avoid their control over the strait. But right now, logically, I think a lot of shippers are taking a beat and trying to see where things stand. So it's certainly possible. We haven't seen that yet. Now, the president himself said that we could see additional U.S. strikes tonight going after likely similar targets. But the question really is who's going to take the next step here. And right now, we don't know. I think for many, the issue is whether the U.S. and Iran will actually find a way back to the table at the end of this week.
Bottom line, I think the president made the distinction we're not at war again, but he's not happy. Is that correct? And I wonder if it's just, it feels like we're at war if we're attacking one another.
So, certainly these tit-for-tat strikes are likely to continue. And here at Bloomberg Economics, we've long said that this was a likely scenario where Iran and the U.S. could not find a reasonable off-ramp, but neither are really interested in engaging in broad-scale fighting yet again, given the huge economic costs of doing so. And the president has said that now several times in the past several weeks about how serious those costs could have been to the U.S. and global economy. So with that in mind, and even the president's own words today, where he seemed to back off of this idea of returning to full-scale conflict, I think we're just likely to see more of the same in the coming days and weeks as the U.S. and Iran try and find a way to have the most leverage in these talks as they move forward.
In the meantime, you've got Brent crude going as high as $80 a barrel, right now up about 5.4%. WTI crude up about 4.6%, but it too was topping 76 a barrel earlier in the session. All right, Adam, thanks so much getting us up to speed. Adam Farrar, he's Bloomberg Economics senior geoeconomics analyst there in our DC News Bureau. All right, latest on the war continues to remain on the list of market risk factors, no doubt about it. Still an unknown, I think it's safe to say, as we see the back and forth continuing. So too is what maybe Kevin Warsh may do when it comes to monetary policy, although I feel like markets are getting more sure about what happens here in 2026, Bailey?
Yeah, it feels like everyone's on pause. Even when you look at rate expectations using the warp function, pricing in a hike in the coming months. But even when you talk to strategists or people who are trading FX, it seems like that's more protective positioning as opposed to really betting that higher is the next move and higher comes quickly.
All right, so let's get to it. We've got with us a guest who has called the family fight that took place 3 weeks ago. We're talking about the latest FOMC meeting. Delighted to have with us Stephanie Roth. She's chief economist at the independent sell-side research firm Wolfe Research, joining us here in studio. Stephanie, it's great to have you here. The Fed minutes showing a few officials saw a case for a June rate hike. What's your read on this? What's significant, if anything, out of the minutes?
I mean, it's interesting that, a few officials did want a rate hike in June. Probably no surprise, and we could perhaps, guess which one of those officials they are. Otherwise, it seems that they are, concerned about the amount of inflation, but not overly so, and expect that inflation should be coming down, but perhaps sticky in the near term. The thing to flag is that they noted AI as notably inflationary, which is something that we're very much seeing in the data.
Yeah, no, that's what I wanted to ask, because as much as we want to talk about higher oil costs, higher gas prices, obviously the events of the last 24 hours changes that. But when we look at the bottleneck around chips and what we're seeing passed along to consumers, higher iPhone prices, higher Xbox prices, how does the cost associated with AI impact your expectations for the next 6 months, the next 12 months?
Yeah, so we estimate so far that AI is boosting core PC inflation by about 40 basis points, at least by the end of the year. Right now, it's about 30 basis points. That should drift a little bit higher, especially as the Apple price increases feed into the data. Interestingly, though, BEA is making some revisions to their data at the end of September that will then cut that roughly in half, which is not great optics, although the change makes sense. So it is certainly having an impact on the inflation data so far. Our expectation is it won't really have a material impact from here. It will kind of be this sticky price increase, similar to tariffs and the Iran war shock, which was certainly mentioned in the minutes as well. Those things should be one-time in nature. The problem is we just have had continuous shocks that have impacted inflation.
And things going on longer than we anticipated. Here we are once again talking about attacks between the U.S. and Iran. And it's interesting how the market seems to somewhat largely dismiss it. The energy markets obviously react. But, I mean, do you look through it? Do you say, okay, it's just a matter of timing before everything really calms down? Or is that still a major risk factor?
It certainly is a risk. At this moment, I think markets are trading it the right way, that this is probably not going to result in many more months worth of fighting. It might be, a short period of time where this creates some pressure, and then eventually they'll probably come to some sort of agreement. Neither side really wants to go back to full-blown fighting. So our expectation is it doesn't result in oil prices rising to $100 and staying there for a while. Our expectation is it won't end up materializing into anything that's much more long-lasting. But, of course, the risks are to the upside.
Well, but with some of those risks, what are the biggest risks that could result in the Fed actually hiking in the next 6 months even?
Yeah, so I think the risk is very short-term. Either the Fed ends up hiking in July or September, although otherwise the window probably has passed, because it's really the next couple of months where data could remain elevated. And then the pressures that we talked about, tariffs, AI-related inflation, Iran-related inflation, those should start to fade towards the end of this year, in which case the case for a hike in this environment is probably not really there. But if we end up with the unemployment rate actually sustainably ticking back down, the most recent tick down seems to be noise. If you end up with inflation running probably about above 0.25% in the next couple of prints in core PCE terms, like that could become an issue.
Does politics play into this? And I bring it in because politics plays into it, feels like the Fed a lot. But we do have the midterms coming in. I hate to say this, but we often have this conversation around elections, midterms or otherwise. Do you think that's going to be a factor?
I genuinely think the Fed's going to be independent from that perspective.
Okay.
Trump might put some pressure on the Fed to act more dovishly than would otherwise be the case, although he seems to have given Warsh some leeway in the most recent meeting because Warsh was more hawkish.
Right.
It was explained to him that if we come across as more hawkish, that will keep a lid on tenure rates or longer duration rates, and therefore actually accomplishing what we want to accomplish because we have established credibility.
Speaking of independence, though, I want to ask you about within the family fight within the Fed, which I love that and how you described it. Explain that specifically, what you think is going on internally within the U.S. Central Bank.
Yeah, so this is a phrase that Warsh has repeated a number of times when he talks about his approach to the meetings. He wants to have a family fight within the members and then come across with one more united conclusion at the end of it. So it seems the days of having many dissents and it coming across as a very Fed that very much disagrees with one another, it seems that debate will happen more so in the room, and then when they come out, it'll appear to be a more united front. And that's our sense in terms of the way this will play out in the next couple of meetings, where there might be a lot more disagreement. And July and September might be meetings where you'll have more of that disagreement. In June, it seemed like very limited number of officials actually wanted to have a hike, so the need for that family fight was a little bit more modest. But in July and September, it could get a little bit more contentious.
Well, with that in mind, how does some of these Feds, going on Bloomberg, going on other competitors, talking about their expectations for this market, behind closed doors is one thing, but when Fed members are asked questions about their view on the economy, their view on interest rates, that's playing out in public, no?
Yeah, and we'll see if the communication style changes for Fed officials going forward. If there ends up being slightly fewer public statements from Fed officials, or if they're out in the media a little bit less than they have been, as Chair Warsh tries to sort of rein in the communication style a bit. So I would expect we might hear a little bit less often from some of the Fed officials in terms of their own views. Of course, we'll still hear from them, but perhaps it'll be a little bit less frequent.
No, I was going to say, I feel like that was kind of the push from Warsh, is to reevaluate how you message to the media and to the financial community. And I think that raises a valid question of what is the right way to do that.
Well, what do you think? What do you prefer? Like, I remember the day when, we focused on Alan Greenspan's briefcase to figure out what was going on. Or the Fed would surprise you with a surprise rate move before the market opened. And now it just seems like there's a lot out there that we digest. And we kind of know how the Fed and its various members, certainly the voting members, are thinking. What do you think is better? Is it more transparency, or is it maybe holding back a little bit, guys?
I mean, I think it's probably somewhere in the middle. I think it is confusing for investors to some extent when you continuously hear various Fed officials with very different views, and then it's hard to kind of assess what's what. That said, having very little communication will then increase a lot of volatility, and then it's hard for the market to assess what the Fed's reaction function is going to be, because you don't really know. Regardless of the market has to react to the data, but then beyond the data, then you have to think about, well, what is the Fed even going to make of this data, and that creates a lot more volatility. So perhaps a little bit less communication, but I would pare it back only modestly.
One thing I want to ask you, and you've got a piece of research out that came out July 7th, the Daily Froth, One Big Beautiful Summer, and talking about consumers. And, it's interesting. They've had a lot coming at them. Wars, higher gasoline prices. And often we have folks say, the consumer's doing well, they're spending. It depends on, again, going to the K-shaped economy, which leg you're on. From a social perspective, it matters that not everybody's doing well. We all know that. But a lot of folks say when it comes to the market or the economy, what really matters is the higher end and wealthier consumer. Is that the case, or is there some point where that lower end consumer that's struggling is really going to matter? I mean, it should matter on a social basis, but I'm just saying in terms of how you all look at it.
Yeah, I mean, and I agree with you. It's a problem that this low end consumer has been left out of the recovery.
Not in the market
years.
For the most part.
Totally, it's a problem. That said, from a macro perspective, it doesn't really show up in the data in a big way. And you could have made this argument many times over the last couple of years. The low-end consumer, it's going to bleed into the middle-end consumer, and that's going to bring down the economy. It hasn't played out that way because this middle to upper-end consumer is really well off, and their balance sheets are pretty good. They might complain about the level of prices, but at the end of the day, they seem to be able to spend. They've had a lot of stimulus come at them with one big beautiful bill, and the gasoline price increase hasn't been nearly enough to offset that.
All right, going to leave it there. Hey, great stuff. Thank you so much.
Thank you for having me.
Yeah, great to have you. Stephanie Roth, Chief Economist at Wolfe Research, joining us here in studio. We're going to stay on research. You know that complicated company called SpaceX?
Very familiar with it. Very familiar.
The IPO.
My favorite company.
Well, listen, it's so complicated that as the Wall Street community weighs in, and we've heard a lot of ratings and price targets, sometimes you need a couple of analysts to cover the company. We've got the duo from Clear Street. They're coming up next. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The latest Fed minutes show a few Fed officials said there was a case for raising rates, though they ultimately supported the decision to leave rates on hold. The latest minutes reflect growing concern among policymakers over inflation as worries about the labor market slightly receded. Right now we have got the 10-year at 4.56% with the 2-year 4.20%, the 30-year above 5%, 5.06% on the 30-year. Stocks lower, but the NASDAQ 100 index just moving back into the green. Little changed. NASDAQ 100 index up under 0.1%, higher now by 5 points. We've got the S&P keeping it all in context, lower by 25 on the S&P 500 index, down 0.3%. Dow Industrials now lower by 550, a drop there of just about 1%. Again, the S&P lower by 0.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, pushing higher, up now by 2.3%. All of this with the VIX right now holding below 17. We've got spot gold down $35 the ounce. The precious metal lower by 0.9%, 4,070 where we stand. West Texas Intermediate crude, 73.61 a barrel. WTI up now by about 4.5%. Barrel of Brent crude, 78.02. Brent crude higher now by 5.2%. China plans to allow some of its biggest AI companies to buy, quote, a small number of NVIDIA's H200 chips. That's according to the information, which cites two people familiar with the matter. NVIDIA shares, they are advancing now. We got NVIDIA up by 2.9%. Again, recapping the Dow, the S&P, NASDAQ, all trading lower. NASDAQ 100 index little changed, up under 0.1%. S&P lower by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Bailey and Carol, that is a Bloomberg Business Flash.
All right, good stuff, Charlie. Thank you so much. Yes, indeed. Carol Massar along with Bailey Lipschultz in for Tim, who is out this week. Hey, we know Wall Street's been weighing in, right, when it comes to SpaceX. And there's been kind of a range of targets, some of them pretty wild.
Some of them pretty crazy. Raymond James coming out with an $800 price target. Mind you, it's at 146 right now, so
that's
months
room
from
to
now,
run.
Quite the return, 400%. I mean, that's better than I think NVIDIA over most spans.
Which would make it, what, something like a $10 trillion?
$10 trillion company. Nothing to bat an eye at.
I think it's fascinating, right? And so we continue to hear all of these, analysts weighing in. I got to say, though, we keep thinking about this company. There are so many different moving parts. There's AI, there's the rockets, there's, of course, Starlink. It's a lot. And I've got to say, when you have a company that's got a lot of moving parts, sometimes you need a couple analysts to cover it. And that's exactly what Clear Street is doing. Two analysts, Brian Dobson, Managing Director, Senior Analyst at Clear Street. He focuses on AI and data centers. He's in studio with us, along with Greg Pendy. And he is Clear Street's Director and Equity Analyst who concentrates on space and satellite communications. And they began with a buy rating and a $217 price target. Stock right now at 146 and change. Gentlemen, welcome. So good to have you here. I've got to ask you, SpaceX is up about 10% from the IPO price of $135, down 26% from its closing high on June 16th. And the stock has hit about $225 on an intraday basis when it was kind of at its real, high overall. Why a buy rating? Is it fundamentally based? Are you guys just thinking, we're going to be patient, it's got to grow into some of its expectations and valuation? Explain it.
Yeah, I'll lead off on that one. Certainly, this is a much more attractive entry point than we had a few weeks ago. I think that throughout our coverage in disruptive technology, we cover data centers, space, rockets, and connectivity, but it's rare to cover it all in one company, right? And that's where we see a tremendous amount of synergy and earnings power as the company gets that flywheel rolling over the next few years. So yes, it's fundamentally based and it's driven by the earnings growth.
Yeah, and we also took a sum of the parts approach. We probably, we looked at the rocket business, ironically, more as a placeholder. It doesn't have much value in our $217 target. The real value...
Starlink?
Starlink is the value component, and then also the AI division is the value component. It's the rockets that allow for strong economics at Starlink. But when their rockets are roughly 60% of the payloads just their own satellites,
right,
it becomes an intercompany exchange there. So our sum of the parts is heavily driven by strong connectivity economics and strong AI.
But when you look at the landscape, right? We've seen the company sell IG debt, but then it quickly trades like junk. I know you guys are equity analysts, but how do you think about the cap stack? How do you think about the ability for this company to go out and raise what likely is hundreds of billions of dollars to turn some of these dreams from Elon Musk into a reality?
Yeah, well, I'm sure Greg has a few comments on this, but I'll start by saying they've proven that they can raise capital through their IPO, right? And I think that as the company starts to report quarters and show real earnings growth to the street, that's just going to reinforce that point.
Are we going to get that on August 17th when it reports?
Yeah, I think so, and I think that management is going to take that opportunity to really fully have a full discussion with Wall Street, right? Like right now, only the banks, of which there were many, were included in the preliminary discussions leading up to the IPO. But here's a great chance for them to really articulate the earnings power of the business.
Well, just thinking about that though, in terms of earnings, that brings the lockup expiration.
That's right.
Are we looking at a pretty choppy next 6 weeks, or how are you guys thinking about that from a fundamental standpoint where we don't really know what we're going to get from earnings or any releases or announcements in the medium term?
Yeah, there could be some volatility, right? Some technical trading, because with a float this small, there's a lot of technical factors, but we see it as a positive.
Yeah, I mean, we think that the name's going to be on every fund manager's radar right now. So as the liquidity starts to open up, we think we'll start to see more of the large institutions look at the name.
Just because everybody's talking about it doesn't mean it's good. Just to be a parent for a moment. I'm just saying, how do we, again, Elon is one of those folks, even with EVs, there were promises, dates missed, deadlines missed. Ultimately, he did deliver. Now there's more competition. It's a different market, we know, for the EV market. Having said that, is it going to be similar in terms of that? Is that what we should expect from Elon and his team?
That's a really good point. And I think part of what you're seeing here is that Elon Musk premium. So this is the same kind of conversation, and I don't want to date myself, but it's the same kind of conversation that analysts were having around Tesla when that company came public. It's overvalued. They'll never hit the earnings growth. This is too much, right?
Yeah.
But it wasn't, right? Ultimately, he was proven correct. That stock's worked out beautifully since the IPO, and we expect a similar performance out of SpaceX.
Yeah, and I would just note that when you talk about the earnings print, the first quarter earnings print was not well received, I don't think, because of the losses in AI, despite profitability in Starlink as well as launch. But they've signed 3 very large AI deals since then, so we think they're much well positioned to explain all 3 pillars of the business in the 2Q earnings call.
But thinking through the company's role in AI, obviously data centers and spaces, the vision, it looks a lot like a hyperscaler right now. How are you guys thinking through what Grok actually brings to the table? Is it a competitor to Anthropic and OpenAI, or is it really, right now, when you look at SpaceX, it's more ability to sell compute and partner with the Anthropics and Googles?
I mean, we think that right now that's probably the correct way to read it, right? But further down the line, data centers in space, that's a really compelling opportunity that's not at all in our numbers, right? And we think that feeds into a bit of
there's a lot of ifs there.
There's a ton of ifs there, but if anyone can do it, it's SpaceX, right? Because they have the integrated rocket business. But that's not in our numbers, and it's not part of our buy rating. It's just an exciting data point.
In terms of the AI components, how much of the interest is Cursor? I mean, we have a lot of folks come on and we keep hearing people talk about this and how important this is. The AI coding startup that it bought, $60 billion in June.
Yeah, and that's one thing that we're looking for them to fully elaborate on the earnings call, right? And that's probably, I would say, the lion's share of our valuation at $217 is the AI business.
That's what I wanted to do, go through that valuation. Because, we're looking at a company with a market cap of, $1.9 trillion. Yeah. How much of that is that? How much of that is Starlink?
Yeah. So we had $9 for the launch business. And as we said, I think it was for the connectivity, we went 20 times our EBITDA, and then for AI, we did.
For AI, it's $113 of the $217 price target.
Well, how much of that 113 though is predicated on what's happening now versus what could happen 5 years?
The lion's share of it is predicated on what happens between now and 2030, right? And when this company announced the price that it was going public at, you had a lot of people coming out and saying, well, that's X times revenue, and that seems rather lofty. But companies aren't valued on what they did now or what they did last year, right? So you have to look at 2030, and we see really substantial growth through there.
Well, one question I need to ask, I look at the street coverage of Tesla, 29 buys, 24 holds, 9 sells. vastly different from SpaceX, 29 buys, 5 holds, 1 sell. Do we get to a point 3 months from now, 6 months from now, where kind of the leash that Elon Musk and Brett Johnson and Gwen Shotwell have been given starts to get tightened, where analysts are forced to say, you know what, we built up this model on 2030, but that looks more like 2035 or 2040.
Yeah. So in my experience, when companies come public, managements are given a great deal of benefit of the doubt. And that's what's happening here, like many go public company managements. And then there will be starts and stops and disappointments and delays along the way, and people will change their ratings, and the coverage of the company will mature.
And Starship is the big catalyst for the stock. So we need that to kind of deliver later this year and prove its ability over the Falcon 9.
This is a really important point. Talk to us a little bit more about that, Greg.
Yeah, so
there's a lot riding on this, literally.
There is. It was mentioned as one of the biggest risks in the S1, and it will be something heavily watched for the stock. So when you look at the connectivity pillar, Starship is important because you can put significantly more satellites on that versus a Falcon 9. When you think about orbital compute, again, it really comes down to the Falcon 9 bringing down those launch costs. If you look at other names like a Planet Labs, when they're looking to do orbital compute with Google on Project Suncatcher, the biggest risk or timing that they mention in the white paper on Google's Suncatcher is launch costs. So a lot will be riding on that.
And it has to happen. It has to work. Otherwise, you have to kind of re-examine. How much, too, of your thinking is the expectation that SpaceX and Tesla become one company? You smile. Is that a yes?
I mean, we can't really, we don't cover Tesla, but it makes a lot of sense, right? You have a huge.
To be fair, I just got to say, if you cover anything to do with Elon, you have to be looking at all of it.
No, I agree, right?
Okay.
So you have a huge AI compute business, and you have Tesla, which gathers tons of data that can be used to train models, really sophisticated models, right? In a variety of instances, it makes
perhaps some government data in there too. Some might say, but go ahead.
Yeah, and I would just note, Elon has a controlling stake in the vote for SpaceX. I can't speak to Tesla, so.
But does that make it easier for Tesla to acquire SpaceX, or vice versa? What's the easier deal with that in mind?
I can't really speak to Tesla because I don't cover it.
But would it be a good thing for the two to get together and have Elon just put everything under the umbrella? Would you guys?
I mean, without saying too much, certainly one of the things that we really like about SpaceX is its vertical integration across these platforms, right? So to the extent that it can extend that vertical integration, I think that'll resonate and potentially drive margin.
Brian and Greg, you can say anything you want here.
we're in a safe space right now.
Space.
That's really, it's just us and our closest friends.
Thank you so much. Stay in touch. Let us know, as certainly the company is front and center for us all, and the coverage is always interesting. Brian Dobson, Managing Director, Senior Analyst at Clear Strait, and Greg Pendy, he's Clear Street's Director and Equity Analyst. Of course, they do cover SpaceX. All right, when we come back, 5 weeks in, we're now in the quarterfinals. Are you watching the World Cup?
I'm sad the U.S. is out.
Everybody is. We're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Fed Wednesday, sort of. We got the latest Fed minutes, and they show a few Federal Reserve officials said there was a case for raising rates, though they ultimately supported the decision to leave rates on hold. The Dow, the S&P, NASDAQ, they're all in the red, but the NASDAQ 100 index back in the green, barely. A little changed, up 3 points on the NASDAQ 100 index. The S&P is down 26, lower by 0.3%. The NASDAQ Composite Index down 20, a drop there of under 0.1%. Dow Industrials down 557 on the Dow, a drop there of 1%. The Russell 2000 Index of small cap shares hit hard. It is down now by 1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 2.2%. The VIX back below 17, and a 10-year at 4.56%. The 2-year 4.20%. Gold, $4,077 the ounce, down 0.7%. Crude is rallying. We're off session highs. WTI, $73.79 a barrel, up now by just about 4.8%. Barrel of Brent, $78.25. Brent crude up by 5.5%. Airlines and cruise lines are sliding today after President Trump said a tentative ceasefire with Iran is over. Among cruise stocks, Carnival Corp down by 3.9%. Royal Caribbean down 0.2%. Norwegian Cruise Line Holdings lower by 1.8%. As oil rises, airline stocks are declining. UAL, United Airlines, down 2.4%. American Airlines down 3.7%. And Delta, which reports on Friday, Delta shares down by 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Bailey and Carol, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Master, along with Bailey Lipschultz, in for Tim, who is off this week. And what's interesting, Tim, with his son Arlo, if I can say that, has been watching a lot of the soccer games. And
Really? He's not a sports guy.
He's not a sports guy, but because his son has been, his little critter, yeah.
Oh, okay. Well,
yeah, but you've been watching.
I've been watching. I'm a big fan of football, as they call it.
I know.
Was not a big fan of the result against Belgium, though.
Oh, okay.
That wasn't fun.
You weren't fun about that.
About
All right.
9 minutes into the game, I was deeply depressed, but it's fine.
Okay. Well, you know more than I am because I've been watching. But I am kind of into it, and I love all kind of the side stories and when the president gets involved. We are, though, in the 5th week of the 2026 FIFA World Cup. Exactly 4 weeks and 95 games have already been played since the tournament began on June 11th, 2026. There's so much talk about it in the newsroom. And one of the lucky members of our team that gets to follow it all, because it's her job, is Vanessa Perdomo-Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. She is here in studio. Can you believe how much has already happened?
You said how many games have gone by, and I actually can't believe that. It's going by so fast. I mean, the final is next week. You know, it's absolutely crazy.
The crazy part is that everyone was upset about the expansion and was like, are we going to care by the time mid-July comes around? Again, dropped off a little bit with the U.S. getting taken care of, but still interested, still locked in, still sad that there's no matches today, whereas it was kind of like, oh, we'll be over it because we're America by July 3rd.
You know, it'll be interesting to see what happens with the interest now that the U.S. is out of it. But I do think there isn't any sort of fatigue, like you were saying. I think people thought the 48 teams and the expanded tournament was going to have all of these upsets and things like that. But if anything, it showed that these small nations, Cape Verde, can actually compete against these really big teams. And it actually, you know, I think it grew our hearts as a soccer nation a little bit.
What is going on with soccer in the United States? How much has it grown in terms of interest and participation?
It's grown so much over, you know, these last 30 years. Obviously, the last time we hosted the World Cup in 1994, the MLS wasn't even here, and it was what spurred, you know, the creation of the MLS. Now, you know, all of the teams, we have over 5 teams in the MLS worth over $1 billion. It's a huge sport here. It's continuously growing. It's one of the most participated in youth sports, and they really expect that to have a boom after this World Cup.
Well, the one thing that I feel like everyone was discussing after the 4-1 loss to Belgium was affordability of club soccer in the U.S. and how it is not anything like what's happening in Europe. How do you think the game could develop and draw in people who can't necessarily afford $15,000 to play at the club level for a 14-year-old?
Billy, it's something that we've been paying attention to a lot on the, you know, the Business of Sports team. It's the youth sports now are private equity has come into youth sports and really privatized it in a different way. And, you know, as someone who came up in the system, and my parents thought thousands of dollars were a lot at the time, and now it's even more. The biggest problem is, how can soccer become affordable? It's not like basketball and football that is kind of affordable at any sort of place in the U.S. So what U.S. soccer is trying to do is create more grants, have donations, and they're probably really leaning on donors to be able to, you know, have equipment out in more places.
You know, it's funny. I was asking a member of our team, Sebastian, who's from Colombia, and I'm like, why has it been such a big sport initially outside the United States? And he's like, well, all you need is a ball. And like the origin of how this sport kind of came to be globally, and then to see how much it costs, like for kids in the US, it just feels like it doesn't match up.
Right, exactly. I mean, that's the point, right? It is actually all you're supposed to need is just a ball, but for some reason in the US it's become something completely different. And also, sorry to our friend Sebastian and Colombia.
He's really upset. I was going to bring that up. He was really bummed today. He was talking to me this morning. The red card and Fuller and Balogun Was that a major distraction?
I absolutely believe that it was. I think if you watch the game from start to finish, the U.S. came out absolutely distracted, and Belgium came out angry. They came out saying, okay, you want to bend the rules for this U.S. team. Everyone's still counting us out. Everyone's saying now, they have a better chance of winning. The odds flipped in their favor. And Belgium said, I don't think so. And they came out really, really hard, and our team just came out very distracted, I think.
Well, to ask a question off of Flo, is he going to be the next star? Pulisic, poor tournament, poor showing, getting up there in age. Flo now is a household name.
Yeah.
The president knows who he is, and I would be willing to bet he didn't know who he was 4 days ago.
That's a good bet.
Is he the next star?
I think he absolutely is the next star. And honestly, going into the next World Cup, the 2030 World Cup, I could see him rising as a future captain of this team, because even though Christian Pulisic wasn't the captain, he was the star of this team, and he didn't perform. And the fact that he came off the field with just a sprained ankle is what we know so far. It's not a showing of what people want to see from their stars in this country. Everyone's pointing to Kobe Bryant would have never done that, certain things like that,
Yeah, go.
Well, I'm just thinking back 12 years ago.
I'm just embarrassed. Did I not say his first name right?
Faloran?
Yeah.
Well,
I did.
Flo is his nickname.
All right, Flo. I know Flo's his nickname. I
Yeah.
just was like,
You're good.
I'm showing my
You're good,
stripes or
Carol.
lack thereof.
Well, I'm just thinking back 12 years ago.
Foul. Sorry.
12 years ago, U.S. loses to Belgium. Tim Howard has the best game in men's history. And then the team is a letdown, truth be told, for over a decade.
Yeah.
Is that a risk with this team? Is that a risk going forward? Or are you confident, is the world and the U.S. confident that 2030 will look better?
I don't think anyone's confident anymore, actually. I think that we were really confident that they were going to be able to do something special in this World Cup because of the fact that they were playing at home. If you can't perform in front of your home audience, Seattle is a huge soccer market. They were ready. They were there. I was talking to people who were in the stadium. They said the energy before was great, but it was deflated very quickly.
It's so sad, right?
Not fun. Well, I'm just trying to even think through what the upcoming matches will look like, though. Obviously, next match in Boston,
right?
Well, outside of Boston.
Boston. My daughter's in Boston. She says it's been wild, and she said when the Scots were there, they were all putting the red hazard cones on statues throughout Boston. She said they were wild.
Scottish fans are known to travel. They're known to travel very far and very hard for these games.
She said it was a riot in the bars.
Yeah. Oh, absolutely. I mean, I think that was one of the things that we were seeing, early on.
Well, no, I just want to ask if there's any risk of a fall off now that we have Canada, U.S., Mexico all eliminated.
All the host nations, right?
I think that there is risk of a fall off in audience. Obviously, the U.S.-Belgium game was one of the most watched U.S. soccer matches of all time. 42 million people tuned into that game across Fox and Telemundo. So there is risk, but I do think there's enough fans here. There's enough people who are interested in it. And listen, Messi's still in it.
So, I just want to ask on Messi. Sorry, I keep cutting Carol off. I'm so sorry. This is
I totally bow down to you.
Very quickly, though, you bring up Messi. Concern around Egypt, whether or not match fixing is in play. Cape Verde had a couple calls go against them. Is there a risk? Is there a risk for kind of the perception of FIFA?
30 seconds. Though.
I think FIFA doesn't have to risk their reputation because they don't have the best reputation in the world anyway. So I do think that, the Egyptian Football Association did file a complaint about the officiating and all of that. But I think that FIFA wants Messi in this tournament, and if they fix it or not, that's remains to be seen.
I love it. It's like FIFA doesn't have the greatest reputation. So just take it in stride, everybody. You rock, Vanessa. Thank you so much, Vanessa Perdomo-Maglione. She is, of course, Bloomberg News sports business reporter, co-host of the Business of Sports podcast. Check it out. You can find it at Bloomberg. You can find it wherever you get your podcasts. All right, when we come back, a check on trading, and I guess our sportscaster will do more soccer.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're getting ready, moving into the last hour of trade on this Wednesday, the week that seems to be going by very slowly. It is July 8th, 2026. I'm just saying there's a lot going on, but somebody said to me, shouldn't it be like Thursday or Friday already?
See, I feel the opposite. I feel like I've already, it should be Monday. I have more things I need to do. I need an extra day. I was telling Talia, I was like, I need 3 hours. She's like, anything for me? I'm like, more time. That's all I need.
hard time. I did say I needed an extra hour today, so I totally get it. I feel it for you. Let's do a quick check on the markets for you. Just down about 24 points on the S&P 500. So not down as much as we were prior to the Fed minutes, which came out at 2 p.m. Wall Street time. I don't know whether there's anything at play there. Down about 1/3 of 1%. NASDAQ 100, kind of call it flat. Bailey, just up about 4 points.
It feels like the wind and unwind. We were looking at a red NASDAQ and industrials and the like were outperforming, but today Dow down more than 1%. To your point, S&P and NASDAQ essentially unched.
Yeah, exactly. SOX is up again 2%. Man, this thing just goes back and forth in a big way.
You would think that semiconductors should trade somewhat linear instead of looking like an EKG.
It doesn't.
But here we are, especially again, crude oil right now, close to $74 a barrel, up more than 4.5%.
Yeah, it matters again, certainly in the market trade. I'm Carol Masser along with Bailey Lipschultz. Let's get to some stocks on the move. With us is Bloomberg News cross-asset reporter Denitsa Sakova. She is in the house, and she starts with the semiconductor sector and one name in particular.
And some gainers. Broadcom.
Apple
is following through on their pledge to boost U.S. spending, and it's following up with Broadcom. The spending is going to top $30 billion. The ticker, of course, is AVGO. The stock is up 5%. Apple stock is also getting a little bit of boost of this. It's up 1%. Of course, this is one of the world's most demanding hardware buyers, and getting this deal is a great opportunity for Broadcom, and clearly we're seeing that reaction. Of course, Apple has disclosed that they're going to invest $600 billion in U.S. companies. That's part of this pledge. Obviously, President Trump has been very active in this. Tim Cook went to the White House. It was a big deal. And clearly it's happening. The Broadcom deal will involve manufacturing more than 15 billion chips in the U.S., supporting hundreds of jobs. And the iPhone maker will also help Broadcom upgrade its production facilities in Colorado. So a really fascinating deal, and it's gonna run through 2031. So really impactful deal for Broadcom, and we're interested to see where the other 570 billion are going.
A little CapEx spending perhaps by Apple there, right?
Yeah, everyone spending more money. Broadcom up 43% last 12 months, but still well below where it was back in early June when it was at 480 and change.
Yeah, a little perspective there, right?
Keep it
All right, let's get to energy stocks. We have to talk about that, certainly with what seems to be, again, tensions in the Middle East between the United States and Iran.
Yeah, the moves are coming from the White House. Obviously, U.S. President Trump said the tentative ceasefire is over. His remark came shortly after the U.S. launched a fresh wave of strikes and revoked the waiver that allowed the sale of Iranian oil. We're seeing a very different reaction, kind of the normal stocks we're expecting to react. Energy stocks are rallying. Two names I'm looking at, Chevron is up about 1%, ticker is CVX, and Occidental Petroleum having a much bigger boost, OXY, is up 4%. On the other side of the trade, all the companies that are fuel hungry, like cruise companies, airlines, are really feeling the pain. Carnival is down 4%. United Airlines is down about 2%. So this trade has been going for a very long time. Energy wins from higher commodity prices. Travel and consumer is losing from higher fuel costs and consumer confidence. And here we go again. It's repeating, and who knows, maybe it's going to reverse soon.
Man, it goes back and forth, just waiting for something. We're going to talk about that too a little bit more later on. Let's get to TeraWulf. We talked about this, was it
2 days ago? It was me. I was in.
That's sorry.
That's your stock. I stole Bailey's stock. But now we have an upgrade from Morgan Stanley. They raised their price target on the data center operator, and it's coming back on that Anthropic lease deal. The company surged as much as 13%. Now it's up a little bit less, but the ticker, of course, is WULF. It's been very interesting because been always thinking about those companies as Bitcoin mining. You know, it's different economics. It has volatile crypto economics, power costs, hash prices. And now suddenly with this 20-year AI infrastructure lease, it's becoming very different. It's becoming a power side that may be more valuable as AI compute campuses. Completely changes the economics, and we can see it from what Morgan Stanley is saying. Their new price target is $72, up from $66, and they see the deal as transaction that validates the direction of travel, long duration contracted cash flows, attractive revenue per VAT. So complete Starship.
And I'll make the exact point Carol made to me 28% short interest.
I know. I just okay, doing well, but man, everybody's just waiting.
They're waiting.
For it to go down. Good stuff. Thank you so much, Denitsa, of course, joining us. Denitsa Sakova with Stocks on the Move. Check out our Stock Movers podcast. 5-minute episodes, winners, losers in the stock market, gainers and decliners. You can find it on Apple, Spotify, or anywhere you get your podcasts.